Welcome back to Pipeline Trading. I have received a lot of requests for gold and silver today, so let's take a deep dive into the charts. Both are sitting at critical levels right now. The question is simple. Are we about to break down below key support? Or can we still bounce? And if we do bounce, are new highs still in play this year, or are we setting up for a larger move lower? Let's get right into it, starting with gold. Right now, we're seeing gold trade lower after a short-term bounce over the last couple of days. The key level to focus on is that 4,300 to 4,400 zone. This level isn't random. If you zoom out, you'll see it's been tested multiple times, acting as support here, and even back here. Price has consistently reacted to this zone, which tells us it's a major technical level. After that initial drop, we bounced, but that bounce formed a bearish inside bar. That's important. From there, we made a lower low and a lower high. That combination tells you the trend is starting to shift bearish. Lower lows, lower highs. That's your signal of a downward bias. Now here's where it gets interesting. We actually broke below that 4,300 level intraday, but then reclaimed it on the daily close. That reclaim triggered a short-term bounce. So as of right now, the key is simple. As long as gold holds above 4,300, the bias remains neutral. But if we close below that level, game over on the short term. That opens the door to further downside. Now stepping back, we also have to recognize the bigger picture. This structure is starting to resemble a bear flag. You get the initial drop, followed by a controlled bounce, then continuation lower. We've seen this pattern already play out once. Patterns work the majority of the time because markets are driven by human psychology, fear, greed, and repetition of behavior. Now, in terms of upside targets on a bounce, I'm watching the 4,650 to 4,660 area. That level was previously support. Once broken, it becomes resistance. That's a core rule in technical analysis. If gold continues higher short-term, expect it to struggle there. If we do break down from here, the next major level I'm watching is around 3,900. That's where I'd start getting interested. Now, let's talk about silver. Silver's a bit more tricky right now. We recently closed below that key $70 level, but we didn't confirm the breakdown. We bounced back above it. Now we're back testing it again. This becomes an important moment. For confirmation, we need a close below the level followed by continuation lower. If that happens, then next targets are $54 and $50. Structurally, silver actually shows an even cleaner bear flag than gold. You had the sharp drop, followed by consolidation. That's why when price was up near the highs, the probabilities favored downside, and now we're seeing that play out. But just like gold, if we don't confirm the breakdown, there's still room for a short-term bounce before any larger move lower. And this is where trading discipline comes in. Every single day, the market gives you a new piece of information, a new candle. You might have a 75% setup, but one new candle can shift that. You have to be flexible and adjust. One of the biggest mistakes traders make is getting locked into a bias. They want to be right. But the market doesn't care. The moment you learn to adapt to accept losses, to stay neutral, and to follow price, you become a much better trader. For me, I already know I'm going to lose on some trades. That's part of the process. This game isn't about being perfect, it's about consistency. Most of my gains have come from singles and doubles, stacking high probability setups, managing risk, and staying disciplined. So right now, stay focused on the levels. Watch the 4,300 level on gold and the $70 level on silver. Let the market confirm direction. If you found this helpful, subscribe and hit the bell icon to stay connected. As always, stay disciplined, trade with intention, and God bless.